Apes and Apettes, welcome back to the channel. I think it is time for an intraday update here today within AMC Stock. Now, AMC is down about 5.5%, and there's some pretty big events and data points that did come out today, with more to come over the next couple of days. Most importantly, you did have Fed Jerome Powell that spoke to the Senate Banking Committee, and we got smaller details of Fed policy potentially to come. So we're going to talk about that. We're going to go over the Ouchhh data, the technicals, the Stocko tracker, and there's pretty big updates on all of those fronts. So I want to give you guys that information. So let's not waste your time. Hit that like button and subscribe to the channel if you are currently tuning in. So that is every single one of you guys watching this video. Thank you for doing that, and let's get to it. So AMC down about 5.5%. We'll elaborate on this more throughout this video. It's a pretty red day for the broad markets, for a lot of your risk on sectors in the stock market. A lot of stocks not doing so hot today. AMC, just another one of those. Now, Fed Jerome Powell, he basically said yesterday that if the economic data continues to be super hot, you continue to get inflation not dropping as fast as they would like, this means that the terminal rate is going to go higher. This means the Fed will raise rates higher and keep them there for longer. All of this, you can boil it down to the odds of a recession goes higher, goes up as rates remain high. So the odds of a recession are definitely jumping. Now, Fed Jerome Powell today put more importance on the economic data coming on Friday and then the CPI report coming next Tuesday, basically saying although they are not decided on how large of a rate hike we are going to get March 22nd, it is all dependent on this incoming data. So if you thought the volatility was over anytime soon, you're drastically mistaken. And coming on Friday, you are going to get the non-farm payrolls for February, which, granted, last month's report came out at 517,000 new jobs. That's a lot. That is over double the highest estimate for last month. You completely blew it out of the water. This month, or I should say for February, you are expecting 210,000 job ads. And anything under that's going to be a good thing, right? Anything higher than that is going to be a negative thing. If you get another 500,000 jobs created, the markets might just throw up. Might just be a 2 to 4% down day coming on this Friday. This is this Friday too, let me be very clear. You also have the unemployment rate at 3.4%. You are expecting to keep it at 3.4% from January through February. So that one will also be key as well. It doesn't tend to move as much as, you know, some of these non-farm payroll reports. Now, a good reason why the markets are down about 0.5% across the board today would be this. Private payrolls rose by 242,000 in February, better than expected, the ADP says. And typically what we've seen in 2022 and 2023 is when you get the ADP private payroll reports coming in good, or coming in hot, should we say, you tend to get the non-farm payrolls that also come in hotter than expected. And that would not be a good thing for the market. So the markets are kind of looking at this like forward indications that these reports are going to be bad on Friday. Kind of like what we've seen before the last CPI report, where you started to get some data points, some smaller tier data points showing inflation going higher in things like used cars, right, in healthcare services, even in housing, believe that or not. Which led to ultimately a couple days later getting that hotter than expected CPI report. We were kind of selling off into the CPI report because we figured it was going to be high. It came out high. It wasn't unexpected. So I think this drop that we've seen today and yesterday is really just pricing in some bad news to come. And it just depends on the extent of the bad news, because this data can be very volatile. If you get a much hotter non-farm payrolls report on Friday, if you get the unemployment rate, which somehow goes down again, and coming next Tuesday, you get a higher than expected inflation report, well, that's going to lead to some pretty big downside for the markets from here, because even what we seen yesterday with Fed Jerome Powell's speech, he flipped the odds from a 25 basis point rate hike March 22nd to a 50 basis point rate hike literally yesterday. It totally flip-flopped. Last time this happened was in September, before the October lows. So typically you don't see this kind of flip-flop this fast, and when you do, it can lead to a lot more downside in equity markets like what we've seen in 2022. But who's to say the markets might not price in a 75 basis point rate hike if all of these data points come in hotter than expected? That's where you start to get some more or less panic in the markets, and that is a reason, why AMC is down today, why stocks are pretty much across the board down today, besides some healthcare stocks. It does look like Nvidia is slightly positive on the day, right? So you do have some outliers there, but by and large, pretty rough day for your average portfolio. Now, if we take a look at AMC more specifically, like I said, stock down about 5 to 5.5% at the time of recording this video. AMC is still on the threshold securities list. No surprise there. We'll talk about the FTDs in just one second. 24.81% short interest of free float. 127.71 million shares that are currently sold short. Cost of bar average of 255.5%. Cost of bar max 293.32%. Cost of bar minimum at 1%. Interactive Brokers has us at a cost of bar rate of about 106.5%. And this is only one brokerage, right? So it could be higher on other ones, but those numbers right there, super high. 20% cost bar rates can give you a short squeeze, let alone 100, 200, or 300% cost bar rates. We've seen as high as 1,000% cost bar rates as of recently, so I wouldn't lose sight of that fact. Now for today, 45 orders totaling about $14 million, positive order value of 9%. Again, not uncommon to see positive order value so low. It's pretty much been happening on a day-to-day basis, but $14 million worth of option activity is on the lower side, so it doesn't look like there's a lot of just overall option activity within AMC stock today, which makes sense because March 17th is going to be the big option expiration across the board for the markets, but as well as for the markets specifically for AMC, where you're looking at over 700,000 total calls for March 17th option expiration, and well over 1 million total puts for that option expiration as well. If we look to this Friday, about 5,600 for calls in the money, 173,000 for calls that are out of the money. In the money puts at about 100,000, and out of the money puts again at about 100,000. So you can see some pretty good volatility by the end of this week as well. I think just the non-farm payrolls and the unemployment rate coming out on Friday, you're probably going to see most of the move coming Friday. I don't really expect tomorrow to be a huge day, although you do have initial jobless claims that will come out in the morning. Could give you a decent sized move. Just depends, like I said, if you get data and some of these numbers that are higher than expectations. Tomorrow you are expecting 192,000 initial jobless claims for March 4th. Last week you've seen 190,000. So if this comes in much higher, that's going to be good. If it comes in even lower, it's not going to be so good. So there you have that information. If you take a look at the FTDs, what we are currently seeing for today, for March 8th, got about 3.5 million FTDs that are coming due today. Tomorrow, you're going to have about 3.6 million FTDs that do come due as well, which could furthermore just lead to a lot of volatility with AMC. If we look at AMC on a technical basis, though, you are breaking down below this lower trend line. Now, this is not to say this day alone is going to ruin this bullish uptrend, But if you start to get back to about $4.60, $4.50 per share, which granted is about $1.20 lower than where we are currently at, which would be a sizable percentage drop, which would be about a 20 to 22% drop from here. If you get back to those levels, that is more or less where this bullish uptrend becomes a lot harder to define. Like I said, I'm not going to go out on a limb and say this is over. It really just depends where you put your markings, because I could easily, just adjust things here to different points on this chart and come to the same overall conclusion. You're not in necessarily the most bullish situation you could be in, but you're certainly not in a bearish downtrend, not even close to that right now, guys. So that's really going to be all for this video. Not too much else to actually add, not too much news, none of that is coming out on AMC more specifically, or the industry as a whole, but expect a lot of volatility by the end of this week, guys. So that is going to do it for this video. We do have a lot of other things to talk about in the next video, so make sure you guys stay tuned for that one. We'll be coming out at about 4 o'clock Eastern Standard Time, guys. So most importantly, enjoy your days. Enjoy the rest of your day, however you want to word it, and I will see you in the next one.